Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for April 3rd, 2023. We are recording this at 1 p.m. Eastern Time, and this is episode number 382. My name is David Cosmeter. I'm the creator of TimingResearch.com, and today I've arranged for Michael Filighera to join us again. You should be seeing his screen right now, and the option professor is back to moderate, so I'm going to go ahead and turn it over to him.
Okay, great. Thanks, David. And thanks, everybody, for being here. Boy, what a big day over the weekend. They cut the production on the energy, at least they say they are. And we got a big pop in energy today, and also the price of gold. So it'll be interesting to see what Michael has to say here. Mike, a little introduction of yourself and what's going on at your company.
Sure. Good morning, Jim.
Good morning.
My name is Michael Filighera. I am the owner, proprietor, trader, analyst with tradershelpingtraders.com, logicalsignals.com, and then I also have another website that is where I put all my podcasts, and that is ihavethestormpodcast.com. Currently, I have a trade room. I'm also expanding that trade room, and we're bumping it up actually to, we're going to be providing more, I put quotes around it, institutional type information. And that is institutional information that comes intraday and truly affects how things trade and what the levels are and who's in there doing what. So that trade room will begin shortly, and I'll tell you more about that at the end.
Sure. Okay, well, let's get a quick, it's Monday, so we normally go over where you think the market's going to end at the end of the day. It looks like today we may have had an opening of around 41.27 on the E-mini June. So that's 41.27. We're currently above that. So do we think we'll be above, below, or the same on Friday, Mike?
By Friday. You know, Jim, it's like becomes a real challenge because we have 4 days and God only knows what everybody has up their sleeves during those 4 days. I do believe that the market has some continued upside, but I have very definitive levels for which the market can reach. And if they were to go by how they did it last week, we should be at those levels by Wednesday.
Yeah.
And so by Friday, then I would think we're turning and again heading lower. Now, whether we'll actually break below today's opening, I would say yes, but again, it depends on how the rest of the week unfolds.
Yeah.
So it's a very difficult thing to say higher or lower. But
especially when we got a lot of data like the jobs report on Friday and other stuff like that too. Yeah.
Right. Plus just everything else that we got going on, which I think I will go into as we progress with this discussion. But in terms of answering that, I'm going to say higher and no more than a 50%.
Yeah. Well, that's a momentum right now. So, that, and they had a good chance to hit it today and they couldn't do it. But of course, you got Tuesdays and Thursdays, which are sometimes turnaround days. So we'll have to see exactly how they survive the turnaround days this week.
And we're not sure how they're going to turn it.
Well, I'm trying to say, and we got a full moon for those of you
who are into
the galactical stuff. Thursday's a full moon, so and jobs report is Friday, so there should be quite a bit of action by the end of the week.
Speaking of that jobs report, don't you find it a little bit strange? The markets are closed, and they've decided to put out the report anyway.
Oh, yeah. Well, I guess the show must go on, I guess.
Not
everyone is celebrating the same holiday at the same time, I guess. All right, let's jump in here and find out what's going on because I've got some comments as well. Let's look. We'll start at the stock market, S&P. What's your read on it?
And the S&P now, I've got two different patterns in progress. Under what I'm using as my preferred, what I believe the market is doing right now. I think we completed a primary degree A wave, and that would be at that October low. And we're working through a primary B wave, which is a bigger move, but it's a counter trend move. And that covers this first leg up, that covers the second leg down, but it also leaves us open to interpretation because you notice I've got two trend lines. And notice that they're forming a triangle. That has not been resolved yet. So if indeed it is, it changes this labeling a little bit by moving this A over to there, and then this becomes A, B, C, D, and we're in the E wave. Now, under that interpretation of the market, I'd be looking for a spike from here, probably up towards 41, 80, 90, maybe even as high as 42, up to 42.50 possibly.
Yeah.
But the resolution of the triangle pattern would be a shift and a severe downdraft. And the first downdraft would likely end up being the length of the triangle, which is here. So there are a lot of people say, well, what would cause that? It's like, here, let me pass the hat and we all pick and reason, because there's enough out there, as you were basically starting to talk about already.
Yeah.
So there's a lot going on. So
Well, one of the big things is you got to talk about positioning. When you hear there's trillions and trillions of dollars running into money market, that means the market's probably going to be very susceptible to a big up move, because obviously people are going in the wrong direction.
That actually was part of the reason that we had such an expansive upswing from the 28th through the 31st of March, was because many CTAs, quote unquote, now I don't know this for a fact, I only know what I heard via other vehicles, that they were caught short, and they were caught short in tech.
Yeah, and there's no sellers because everyone already sold and went into money market.
Right.
So you can squeeze.
And so now what are they going to do?
That side. Yeah, they squeeze the side where the volume is weakest, and obviously
they squeezed the side, and they squeezed them real hard.
I got two.
Plus, on top of it, on top of it, we had, which is an ongoing position that JP Morgan has been controlling and magnificently, stealthily executing at the end of each quarter. I mean, these are very, very high grade traders putting this stuff on, but it's their hedge fund. It's a JP Morgan hedge fund, and they hedge it once a quarter on the last day of that quarter. So everyone was already coming in on Friday realizing, well, we know that the call side, the call short side of this hedge was at 40.65 in the options, the March 31st options with the strike of 465 in the calls. That's where the short side was. So everybody's like waiting. It's like, well, he's getting squeezed because we saw that the market, even via the SPX, went above 40.65. They're very, very, very clever, the people over at JP Morgan. I got to tell you, they came in and they hedged part of that with the 0 DTE options. And for those that don't understand what that is, it's 0 days to expiration options, which mean they live and die all in one day.
Yeah.
So they came in and hedged their total position that they needed to roll so that they didn't get squeezed so severely. And then right towards the end of the day, they flipped it out twice. They flipped out the calls, and then they flipped and put on the puts. And these are massive positions, folks. They're massive. The call side was 43,000 or 40,000.
Yeah. Let's get into like a couple of things here real quick. One is points where this thing could slow down if it's going to slow down. I have something at 42.05, and I've got something at 43.06. 43.06 would be a 61% throwback from the 48.10 and the 34.91. So do you see anything around the 42.05, 43.06?
Well, let me put, I can put that on, and then we can talk about that.
Yeah.
So you're basically just putting retracements, which I have up, which I had before, because I think that's not, I wouldn't say that it's not valid. I'm going to go back to my daily. So here again, 42.05, no. I actually have 41.75, and then it jumps to 42.55.
Yeah.
But I have right around the, that 4,300, that 43.05, I have 43.05.
Yeah. So that's pretty close.
And what was your second level?
No, just 42.05, which, listen, 41.75 would mean it would fail before it got there. And then 43.06 ballpark is right around your same number there, which is a 70.5% retracement.
Right. And actually it is 40. There it is. There's the 618. So yes, you're correct. It's 43.06.
Yeah.
Yeah.
So that's an interesting thing.
But I'll tell you, right at that 43.06, that's a little tiny cluster.
Yeah.
So I would actually say 42.55 to 43.30. I think that top side is.
Yeah, that's a zone.
And that's a cluster of fib resistant.
Right. One other thing is I've noticed, because in December I totally came out and said that it was time to switch out of value and into tech. And obviously tech has been on a huge tear since December. So it was a very good call on my part. But
Yes,
I
it
see
was.
recently a little bit of a shifting where I see the QQQ is a little weaker than the S&P. And I'm wondering if there's a little tide change there. If you look at the QQQ versus S&P, are you seeing any weakness, relative weakness?
I think that I find that the spiders, yeah, I see the weakness, but not necessarily in the pattern. It's just that it's not getting as far as they're not moving totally in being congruent with each other as normally they do, but they haven't delineated off of their shared patterns.
Yeah.
But I agree that for a long time we saw that tech was a little bit slower on the uptake than we were witnessing in other parts of the S&P.
Yeah.
And that changed.
We had a big rip there. And the other thing might be happening is, the market is pricing over 100 points of rate cuts by the end of the year. If they are not going to happen, everyone who might be betting on tech and ran those tech things way up, like NVIDIA, et cetera, they may come out if they change their tune and start saying, hey, there will be no rate cuts, like the Fed said already. There's going to be no Fed cuts by the end of the year. If they really change the pricing on interest rates, that could have an effect on tech, and that could be what it's kind of hinting right now.
That is actually, you're right. That is what is being filtered through, and it will hurt tech more than anything else. And that's what we're seeing. Yeah. They rallied strongly on the basis like, okay, Fed's going to ease, Fed's going to ease, Fed's going to pivot. Whatever the conversation was out there, they traded on that. And then we got end of the quarter stuff, and then we got the big roll stuff, and we had a whole bunch of things filtering through that had nothing to do with the Fed.
Right.
I think that the conversation surrounding the Fed is they're truly between a rock and a hard place, right? I mean, they're damned if they do, they're damned if they don't, because if they don't continue to raise the interest rates, inflation will run out of control. It will grab us by the you-know-what and take off, and the Fed will have run out of bullets because they gave up. So, but if they ease, that's also disastrous, because what it does tell us so that, oh, good, we're going to go into hyperinflation.
Yeah.
And so I think they're between a rock and a hard place. And the thing I think people need to understand, it's like it is a self-made disaster by the Fed.
Yeah.
Pure and simple. That I think people need to understand that the deposit requirements of big banks and what they have on their deposits and what they had to really keep on deposit to secure them, the Fed had rules, they had requirements that were lifted in March of 2020. So, and they've not reinstated them. So then what do we get into? We get into a Silicon Valley Bank problem. We get into a First Republic problem, et cetera, across the board. And so for the market to really believe that that's done, that there aren't anything else, and the Fed saying, hey, the FDIC, we're all really good. We're good. And then come out with a report that somebody's talking about that the FDIC paid out $22.3 billion to rescue Silicon Valley Bank and Signature Key Bank's big depositors. That put a big hole in their fund.
And the gold thought that was very inflationary.
And guess what? I trust gold traders more than I trust Fed traders, I suppose. But yeah, so we got these things that are still sitting out there. They're hanging over the market. So again, there's so many things that they're just being done because that's what we do, or that's what the money flow is showing us. And I don't follow them because I'm like, well, I don't agree with doing that. But I'll tell you what, as a trader, I will most certainly trade it.
Yeah, absolutely.
So,
Well, do you want to, so basically in summation here, it's possible we go up towards the 41.55, 41.75 or 42.54 as the two possible legs up.
yes, and I think the first one, you're right, like 41.75, 4180-ish, but the second one could be a surge, and that would then be 4255 to 4300. So I go all the way up. And on an outside, if I'm leaving this count in and we're in a C wave up, what we're finishing up here, Jim, at this 4175 to 4300 level is just a third wave. Then we pull back into 4, and then we still go up into 5. So this upside level here, 4511, that's not out of the picture yet. And it's not unrealistic.
Oh, no, that might be the completion of the throwback rally.
Yes. Of this secondary.
Of this secondary thing, yeah.
Yeah, absolutely.
And it would coincide with the 61% throwback from high to low.
Right. But what I want to hopefully just really state, not necessarily strongly, but strongly, is that if the market goes up there, it is not a breakout. I mean, in terms of, yes, it is, but it is not a breakout. It's not a new bull market. It's not anything other than a counter trend rally, counter trend, and it's on a large degree. So this is the October lows. If we don't get here until June, what we're talking about is a 10-month rally, 9 to 10 month rally. And now,
on a short-term basis today, it looked a little like that 4160 might be a high point to trade against. Do you see anything on a short-term basis? They're at 4160. Looks like it might
4160. I do. Yeah. I've got a level right at 4155, which has gone up and nudged against today.
That's what I'm saying. Yeah. And then it looked like it gave up pretty good. If you put on like a 15-minute graph, I mean, it would look like it could be trying to turn over here. Because you got a very good divergence on the RSI.
Right. And right off of that high this morning.
Yeah.
I'll tell you what was going on. At the time we had algos, and they were strong, and they went up and they did a stop run. They took out a bunch of stops. And at the same time, once you can see that happen, they turned seller.
Yeah.
And these were sell sweeps to the downside.
They picked up 30 points quick.
Yes, it was very quick. So now we're just kind of doing a little bounce off of that.
Yeah.
And I would suspect we get another little slip lower.
Do you have RSI on there?
I do. It's all the way.
You show a little divergence. That red bar when it went up that time, it definitely had a lower RSI, didn't it? On mine it does.
Yes.
Anyway.
Yes. We already were declining. Yes. So when it got up there, RSI was already diverging. Yes, I agree.
Yeah, because I have a 76 on mine when it hit 41.42. And then when it hit 41.60, it's down to like 70. Not a tremendously difference, but some difference.
Right. I agree. I got up to exactly what you're saying, 78.
Yeah.
And then back down to 70. Yeah.
The key is going to be taking out this 41.25 area and see if it can really go down towards the purple line, huh?
Which is the 200.
Yeah. It's trying to turn up, so it's not exactly folding over.
It's still kind of just bouncing around.
With regards to the energy, can we go on the crude oil and see what's going on there?
We can.
Yeah. The
surprise of the day, right? I remember seeing that news last night. Look at that gap. Whee! Yeah. I saw it open yesterday. I'm like, what the heck is going on with crude oil? And then I saw the news.
Yeah.
So it was a surprise. It is actually holding things up, although they did kind of run up and they pulled it all the way back and now they're running it back up. But this is a 15-minute chart, and look how tiny those bars are.
Yeah.
It's kind of this, is it really rallying strong? No, we got all the flat tops and a little rising bottom, and it looks like it's a little wedge, and it's going to come back down this afternoon. Again, I don't know. But in crude oil, I don't really trade it anymore. So this is from the last time we did it, Jim.
Uh-huh.
And even though we were looking for downside, it has exceeded everything to the downside, almost 1.618, which is not uncommon.
No,
but it got there. And now, if anything, a recovery rally. So if I had to say what we could think about for this recovery, well, you just do the opposite and put in just retracements. So you could see initially we gapped above it. So we gapped above the first level. And now we got a 200 moving average at, and this is on a daily, the daily 200 sitting at 83, 15, 20.
Uh-huh.
But then our next level up is 85, 66. Then we have 92. Then we're heading back towards par.
Right.
And it definitely could do that. It definitely could do that. If they really stick to their guns and they don't release anything, either
Well,
they're
then
gonna
also
try to-
there's talk about that's going to obviously spur more production out of other areas. So there's an offsetting. And then, of course, the demand out of China was skewed because it was their Chinese New Year. And now that that Chinese New Year thing, celebration is behind us, they're looking for a settling down in demand in China too.
Yeah, but they make it a settle down, but they also have a new agreement between China, Russia, and India.
Oh yeah, no, there I saw that
And
picture
so,
too,
you know, Russia will sell their oil for gold. So that's a whole nother conversation, right? Now we got gold and crude being tied together, or other things.
Another thing I read today was that the number one currency that's traded in Russia is now the yuan.
Amen.
So
You see the
that's,
deals they're making behind closed doors?
Yeah.
And it's all in preparation. It's a whole nother conversation, but it's all one I think that we should have at some point, Jim.
Yeah.
It is they're digitalizing the currencies. China's the first one. They've got it going already. And so why in gold, and if we switch to that, the conversation turns to gold. Why is gold rallying so much, and who's buying so much during these rally phases?
Or is it a no seller deal?
No, it's central banks.
Yeah, because they
The
had done
number
a
one
lot of
central
buying. I
bank
don't know
buying
if they're
gold
still
right
doing
now,
it. Yeah.
Russia.
Yeah.
Russia. Number 2, China. Number 3, India.
Yeah.
So
We've got on the S&P, we're all talking upside. I got some pretty good support that would have to hold anywhere between 39.60 and around 4,000, 39.80, 39.90. Are you showing in other words, we're all talking about how high it's going to go, but what about if it starts breaking? Where's the trouble?
for me, the trouble would be if it breaks below that. First, we got these June lows. Actually, when we see March lows, whoo, and those are 38.40. And then we have the October low at 35.80. And that's basis this contract, the June contract. Actually, that low is the 35.02 low, which is from 2022.
But what about as far as current lows? You know what I mean? In other words, everyone is long right now, and they think it's all going to 4,200 and 4,300. If it started getting under, what level might you change your tune on that? And I was saying
right now, I would say I would agree with you. I got 40, actually 40.80, but you could drop it down like 40.50. That would be a major level.
Yeah.
So, and the thing that you can kind of, this can change. And I just want to show folks, if you have access to options, you can be, and I would stick with the SPX because that's always big daddy. And you've got to start coming out, and you can look at every day, and you can start to see what are they ticketing right now, right here, 41.10. Where are we sitting? 41.10. Where are the puts? 40.80. So now you've got a wall on both sides, and the market tends to go in between, but you're getting an indication a little bit of where they might try to tag this for the close today. Now you can play this game and keep going out and look at what's available, but that's going to tell us more on a day-to-day. And when you can see, like, for example, we can drop it down to the last trading day in April, which is going to be the 28th, and you start looking. Where is the open interest? Where are they wrapping stuff here, Jim? 40.50.
Mm-hmm.
So you can start to see it, and then that helps you to understand. It's like, well, why would they support it there? Because that's where they're putting their markers. So you can start to put together your picture in that basis, and it still remains somewhat technical. But what I'm also trying to tell people right now is, like, we've also felt that the SPX, the ES, the indexes, the ETFs are the underlying, and we figured the options are the derivatives. This would be a conversation I'd love to have with you, by the way, because of what your side of the business is.
Yeah.
it does appear right now, and I hate to say it, options are the underlying and the indexes are the derivative.
Well, they're probably using replacement trades rather than taking a bunch of stock risks. They can do a limited risk and do other type of hedging with the options, and the volume on the options so high, they can get in and out with a whole bunch of contracts. So it's a lot of reasons. I got extremely positive on the oil 2 weeks ago because they came down and hit my moving averages I use on my 5-year graph on a couple of the indexes. So let's look at OIH. And on a 5-year graph, I have a 120-month moving average that came in at 220.
Hold on, I want to just see what month. Oh, come on, go away.
Yeah, it came in at 252, and that was
So you
about
have
the
a
low
5-year
about
graph.
2
Let me
weeks
go to
ago.
my weekly, and that's
And
going to
it was
go
obviously
here.
a fabulous time to get bullish right there. Now it's just to enjoy the ride.
So what was your level?
252 on OIH.
Yeah, God, there you were. We
Yeah, well,
hit
and
that on
also
the
look at
20th of March.
also corresponds to those highs. But I'm using a 120-month moving average on that. That's the longest one I use, and sometimes it's an excellent one.
But I had fib support or resistance, which support on the way down, resistance was on the way up, and that's at 251.
Yeah, I mean, if it didn't hold that level, it was game, set, match. So that's what made that level so interesting.
Game, set, match. I like that.
Yeah.
And it's still, and you know what? It still remains actually, right?
Yep. And then XOP is another one that hit the number almost to the penny. And that's your oil explorer.
Oh, look at that one. You're right.
Right there. That's it.
You're
That's
moving average at 115.
That's exactly right. Exactly.
Yeah.
Right.
Oh, I see it.
Yeah.
What a beautiful trade. That was nice.
Oh, yeah. That's why. I mean, if it doesn't hold there, it's game, set, match. So if you're ever going to take a shot, that would be the place to hit it. And then, of course, get your stop on the other side and see if you get lucky, and you get lucky.
How do these options trade? Do they trade well?
Well, I guess I'm talking about actually buying the stock here. But
I got you. Okay.
You could have bought calls. You could have done anything that's bullish and made a lot of money, obviously, in the last couple of weeks. Of course, the thing happened today was the accelerant. But even before that thing happened today, this thing was rising pretty well.
They were kind of giving hints that something was up.
Exactly. What do you think? This is a secret when all these guys get together? Somebody's fronting
right.
stuff.
Right.
Come on.
Right.
You have to be crazy not to think that.
I'm with you. And that was a great trade. Congratulations on that one.
Well, like I say,
good.
it takes patience. You know what I mean? You have to wait for it to get down there. It takes time. But when it gets down there, that's the stuff. I mean, if you played it against there.
I mean, off of that high, we had several solid sells, but off of this high, it was just 2 weeks.
Yeah. Yeah.
Boom.
So anyway, that's why we follow these averages. They're not coming out of people's ears, and we're not the only ones following it, obviously, because they can trend off of it.
Correct. But that great call.
Yeah.
I'm going to give you the full credit there. Great call.
And like I say, the oil was at 64, 66. I mean, if we go into the 50s, like I say, it's game, set, match. And you don't think OPEC knew it? Why do you think they came up with cutting? They know it's game, set, match if we break under 64.
Right. Right.
So anyway, like I say, that's why it's important to be patient. It's important to use these numbers because these numbers smooth out the edges, right?
Well, let me ask you then, and then that same basis, do you feel that, because I agree, great call on oil. It was a surprise, except for people that actually were doing the work.
Yeah.
That started to sniff out something was up. Now we get the reason, we see what's happening. What do you think that the equity markets are going to ignore it?
Well, they're not going to ignore it, but again, they are going to put it in perspective. Like today, the perspective is probably being lost because it's jumping right up into that 83 area where there's resistance, and then there's a ton of resistance at 93. So this thing could get hairy and go up another $10. But if you buy on that strength, you're probably going to get whacked because there's a lot of resistance at 93, and the story will change over to some of the things I'm talking about, that the China demand is going to actually come off the high points because it's no longer their new year. And the higher prices could actually hurt demand here in our country. And also there could be cheating and 9 million other things on the other side of that coin.
Okay.
So again, you're looking for a bunch of trustworthy people to adhere to these cuts don't forget when they cut, they don't get as much revenue unless the price goes up substantially, right? So the bottom line is, and then of course that opens the door for all of the US people and the Canada people who aren't cutting to bring stuff to market. And that could be an offsetting penalty too. So 83 was a big number for me and we're not above it yet. And 93 is a bigger number for me and we're not above it yet. So although I enjoy this rally and it does look like something could come of it because we're going into spring and summer driving season, it also has got resistance, as your chart right there shows some resistance right ahead of it.
Right at 83.
And there's now a gap underneath to be filled. So,
I agree.
So,
and if you're a gap trader, and the other thing, Jim, what if that turns into an island?
Yeah.
Game, set, match.
Yeah. So anyway, it was a great time to do it at the lower end. At the higher end here, it's a little bit obviously not as attractive. And then, when you buy something that's already gone through the roof, then you got to go to the short-term graph to come up with a stop on it because you don't want to risk it back to the lows.
No, I agree.
That would be a heavy hit to you. And a reminder, don't buy, something
But
that's
right now,
already
even
gone
on an
way
Elliott
over.
basis, it's looking pretty good. If I had to say, and this is on the daily chart, and if I'm counting that, is that a good low? And then we're going to start to do either an ABC or we're just doing a 1-2 gap in a third, little pullback, and then as a 4 and then a 5. And then we get up to this 83, maybe 85, do a larger turn. But if it turns into a 5-wave structure, gap included, then you got another 5.
Yeah.
We do 5
That's why I
up,
like
3 down, we got
90,
another 5.
Yeah, you can see 93 and you've got 83 in pink there for some reason. So 83, 93 are two big numbers for me.
The
And like I say,
the magenta 83 is the 200 EMA.
There you go. So, and look, it held back there in October.
Yeah.
Kind of held.
So yeah, I mean, no,
held back in October. Yeah.
Crude's back in fashion.
Yeah, it is. When you think about it, the way they're all talking about going electric, if you had any of this stuff, you'd like to get rid of it as quickly as possible,
Good point. Very good point.
Well, let's take a look at this gold because gold is either making a quadruple top up here or it's going to break out and go to, very high numbers here. So let's see what gold is telling.
First, let me start by saying that my next stop for gold, in all honesty, is 2138.
Just a little bit of a new high, suck everybody in. Maybe even get a divergence in the RSI.
I think, what I think is kind of going on is that we're in. Let me go one more out. I may have to correct the degree, but let's just say this is a small an extended fourth wave, which took from July of 2020 to October of 2022 to complete, starting our next rally phase, our next upside move. So far, I've got 1, 2, and then we're starting breaking in the third, a 1, and now let me drop it back down, a wave 2, which is ending up being this sideways nonsense. So, yep, these are solid moves that gold is doing, which it continues to suggest upside still to come, but it's within a small correction. Now, whether that correction is over or whether we pull back down a little bit, get closer to 1950 or at least below 1960, so that's even not that much more, then I think we start to launch again. So right now we're still just playing around inside this A, little B, and then we should maybe get a chance to start going again. A, B, we get a C wave, as ugly as it is, maybe brings us back to here, and that sets the stage for the next buy. Again, as I stated earlier, the thing to keep in mind here, and people say, well, who's buying gold? Why are they buying gold? It is central banks right now. And in my view, is that they're buying it because not everyone, countries are digitalizing their currencies. And so in process of doing that, you have to think, it's like, if you're going to want me to come trade with your country and pay you in a digital yuan, what's there to protect me on this digital yuan? And right now, nothing, right? Because what can protect you when you buy a Bitcoin?
Yeah,
it's virtual. You get nothing. So the process that's like, well, in the good old days, and I'm putting quotes around that, central banks had large gold holdings and they backed the currency with gold.
Yeah.
I think we're seeing that again.
Yeah.
And so with that in process, and just the limited amount of available gold, the limited amount of what's left in the ground that could be pulled out, kind of spells to me that we could be in store for a really strong squeeze in gold.
Yeah.
I think once it really starts breaking above the highs that we've seen, which was what, 2089?
Yeah.
2100 is going to be just a walk in the park.
You know, I'm looking at my stuff here, and I have a 1 month chart that has an RSI right around 60. I've got a 1 year chart that has RSI right around 60, and I have got a 20-year graph where RSI is right around 60. And my feeling on RSI is if you break through 60 substantially, you're going to get an acceleration phase to knock your head off. So right now is a very key area, I think, for gold, because if we can't get through this 2000 area ballpark, 2050, 2000, then gold's in trouble up here. And if in fact you do, I don't know that it would stop at 2180. You know, I think 21.
You know what? I agree with you. I agree with you 100% on this one. I really do. And I think that
RSI at 60, I think, is just a real important thing, which means
that it's sitting there on three time frames.
Yeah. Yeah.
And bigger time frames. We're not talking little time frames, or bigger time frames.
In my view, it's either going to fail from here, or if it gets through here, there's going to be probably an event going on that would be an accelerant, kind of like we had over the weekend with the oil.
Right. And folks, just to kind of show you what Jim was talking about here on my chart, you can see that RSI on a monthly. This is a monthly maximum. This is a multiple year.
Right.
60.
Right.
I'm going to bring it down to the weekly. This is what he's talking about.
Yeah.
A little bit higher, but still, you know,
the weekly,
in the 60s.
The 5 year doesn't have it. The 1 year does, and the 1 month. 1 month, 1 year, and a 20 year. Hey, 3 out of 4 ain't bad.
Oh, no, but I think it's, you know, but it's a little bit higher, but still in the 60s.
Yeah.
So, and there as well, 60.
Yeah, see 60 right there.
This is a great add to this conversation, because relative strength. So what Jim is telling you is absolutely, it fits to a T.
Yeah.
If it breaks above and keeps going, there's going to be no stopping this thing.
And 1960 that you were talking about, and 1970, those are two reasonable numbers to use as a net underneath.
Yeah.
Because if they started to break, then I think, and we just tried to take out 2000 again, that might not be the best sign in the world, blowing out 1960.
Right. No, I agree.
Yeah. Because, my longer term averages are still at the 1800 neighborhood. And 1800 is, 10% underneath where we are now, which is not tremendously overbought, but it is a bit overbought.
Well, I've got the daily 20 sitting right at 1960. That's this dark blue. So yeah, that fits pretty well. That fits very clean.
And the gold shares, you want to put up GDX, the gold shares, obviously there's a lot of different gold shares, but
sparked to life.
Yeah.
I had set up for a little bit of downside, and that ain't happening. Doesn't mean it won't, by the way.
Yeah.
It needs to break above this. So right now it's holding the January highs.
Yeah.
And it needs to break, which I think it will. And once it does, let me take that out. And what we're now going to be putting on is how high can this go? So we reverse that order and we include the rally down to the decline. And I think that was going to be the low. They're both.
And that $30 area for me is very important. And you're right in those 29.50 to 30. So, that's the line in the sand for it, as far as I'm concerned.
I would agree with you on that. In fact, I would call it 30. I mean, you could say 29.40. Yeah. But I would call it.
There's your parameter. You need parameter. In my view, you need parameters. So, your parameters here are blow out the recent highs of $34. And I think there's a gap. I have a gap here between 36 and about 36 and a half. Do you have any gaps on yours? This is on my 5-year graph. I have a gap.
36. Yeah, right here.
A little bit.
It would have been like April of 22.
Yeah.
Yeah, I see it. It's there.
Yeah. So
It
that's
doesn't look so,
that can be
it
an
doesn't look so big
attractor.
on this chart, but,
No, hey, listen, I look at gaps, they get filled
and I got another one in
at
May.
some point. Yeah.
They do.
Yeah.
This had gaps all the way down.
So there's a
Right.
decent parameters, maybe go up towards 36, 37 on a short-term deal to fill that gap, and under 30 would be
I would hope that
no
it would go up
bueno.
to 38.50 when they're filling that gap. That's a nice number. That's a good fib number for a pullback. And mind you, that number is just saying that this leg in process is equal in length to that leg. Doesn't look like it right now, but this was spread out and had some big corrections, and this is more just straight up.
You know, it's
So-
amazing how the juniors, GDXJ, has an identical chart to the seniors. You would think that they would not be so in tandem. GDXJ, the junior miners, more aggressive.
GDX,
Yeah, GDXJ. GDXJ. Same thing as
GDXJ.
yeah.
Okay.
G
I
is in
don't think it's going to
Gary.
come up. No.
G is in Gary. DXJ. There you go. Put a J on there and bam.
It's exactly the same.
Is that weird though? I think it's weird.
Well, I
Because,
think it
you
just
know,
gets to a point where, it's an ETF.
yeah.
People that want exposure to gold, they probably think, well, I like this one. But, whatever, why they ever choose, I don't know.
Well,
But-
they think they're going to get more action on the juniors because they're more thinly traded, I guess.
Possibly.
What about
Possibly.
SIL?
I'll have to
That
tell you,
has had
isn't that the big one?
yeah. 'Cause,
you wanna go
silver
to-
needs to get above $25 though. It's still trying to do that, I think.
Oh, it definitely is still trying to do it.
Yeah.
In fact, they're pulling back a little bit today instead of
Yeah.
but that's okay.
And the miners have got some pretty good resistance at $32 as far as I can see. The SIL. SILs and miners.
Oh, for definitely, they've got resistance. Just they got it
Yeah.
starting at 31.89
Yeah.
up
Yeah.
to 32. But yes, but here as well. Let me just
Yeah.
run the same thing.
And that RSI is getting a little rich up top, huh?
It is, and it could just be pointing to a pullback.
Yeah. It's a strong market. RSI doesn't get to 70 because it sucks,
There's your 32 resistance,
Right.
618. And that's where this would be 618 of that. Perfect time to pull back, not fall apart, but
No.
just pull back.
Yeah.
Now, the thing about silver, if you just kind of are looking at the future, it took forever. But when it caught, it's now playing catch up to the big brother gold. So I think silver will. I have some numbers, and they're pretty big. They're up there, but 27 continue up. We're talking this thing could get and go up to $30. If indeed, if we just think about the correlation, if gold really pops and goes to new highs, could silver be not willing to go back towards at least 27, which is where I have stronger resistance?
Yeah.
I think for sure. And that again is where this move would be equal in length to this one. And this one had all these fits and starts to it, where this one is just more straight up, which is why you're like, wow, that one's a lot longer. It's like, no, price wise, this would equal. And if they do it in the same fashion of which they're moving right now, it shouldn't take too long to get there. And then we get a pullback. But I agree with you. The daily RSI is kind of saying, we might pull back before.
Yeah. Let's look at two things before we run out of time. Put $TNX, because my feeling is if we start substantially getting under 340 on the 10-year, it could go down to 260. And that would probably mean something's going on where the Fed has to cut rates, and then that could make these oils and metals go crazy again.
Right. Can you tell me which
TNX? Yeah, $TNX.
Thomas Nancy X-ray?
Right.
I don't have it. It's not pulling it up.
How about just TNX then? Forget about the $. 10-year note.
10-year treasury.
Yeah, that's it.
Oh, I don't use it. Oh, yeah. Thinkorswim doesn't use the $.
Okay. Well, I mean, this thing to me, you can see that thing just hanging there and you can see it's the abyss underneath. And I've got long-term moving averages on my 5-year graph that comes in at like 260. On my 20-year graph, the yield could drop even as far as down to 250 or 2%. Now that would only happen.
And I won't. May I show you a chart?
Yeah.
Which may coincide with exactly what you're talking about.
Yeah, because this thing is holding on for dear life right now.
Let's go to the 10-year note period. All right. Yeah. And the 10-year, just a whole shebang, folks, or what I'm going to encapsulate it real quickly. When I come out here and I look at my longer term chart, which is just a 3-year weekly, we topped out in August of 2020. We put in 5 waves down, which take us to October of 2022.
Right.
That's an A wave. So this was our first leg down in terms of higher yield, lower bond prices. So that's the decline.
If you put this up with the TNX though, and people could see the actual interest rate, because the interest rate is maybe easier to figure out for some people.
I will, but I want to
109.13. If you don't know the futures, is going to be hard to understand.
Right, but I just want to show what the moves, because you're talking about the possibility of lower rates.
Yeah,
I'm going to show you how it can get there. So we're looking for an ABC on a larger scale to come up. Here are my markers for that move.
Okay.
120, 135, 124, 128. Those are the markers.
Yeah.
Now, I can put up, I do have my 10-year, it used to be here. I don't know what they didn't have it.
You want to put TNX up and just use
I'm going to put, oh, come on, people. TNX. I used to have it.
Yeah, because, they always quote the 10-year interest rate, so everybody knows what that is.
Right, right. But this is just the index, the 10-year treasury index. So this is not yield, is it?
Yeah, it is exactly the yield.
So it's 34.43?
It's 3.43 right now.
Okay, got it. Got it.
And can you see where I'm coming up with my two?
What the yields can do?
Yeah.
Yes. Yes. Now, 2%, no.
Well, that would be obviously.
I had to go and just, let's do this.
Yeah.
If we got an A, a B, and we're looking for that C down to correspond, right? So what the bond price did was it declined. What the yield did is it went up.
Right.
So I'm not going to run the same thing.
Yeah.
Oops, wrong one. Let's go over here and go to just straight retracements. We're going to go right up there and put that in. Look what we got. 2.87.
Yeah.
2.4.
Yeah.
What were you talking about?
Yeah.
2.8, 2.75, and 2.5.
Yeah. Because with an event, it could drop pretty fast because there's a lot of money on the sideline,
and it could do it without any talk about easing anything.
Right.
It's going to do it simply because this is where it's headed.
The technicals, yeah.
It is technical. It's purely technical, because and this is what I think we want to make clear. Yes, the potential for the interest rates to come down a little bit exists, but understand that it's a counter trend move.
Yeah, it is a counter trend move.
So the whole concept of what interest rates are doing are going up, but as we know, nothing goes straight up or straight down.
No.
So we're going to have a counter trend move.
Yeah.
We're going to come down. We're going to relax a little bit because of the current environment, because of the current seriousness of what's actually going on. I would start looking for the support right around 3.25.
Yeah. And, this kind of, if there was a break, under the abyss here, that would give you the 4,300 on the S&P.
Yes. Yes. And that correlation works.
Yeah.
I'm saying the same thing.
Yeah.
But at the same time, it's also appearing that we may be done with this, and this would show you the absolute disaster that we could be confronting. Is that if this is it, that's all we get, and maybe down to 3.25, and then we start turning higher again. Uh-oh. Yeah. Don't get in the way of that.
Yeah.
Do not get in the way of that, because
Yeah, 'cause I'm still a believer they're going to have to get Fed funds above the CPI number, and so if they and that means they've got a lot of work to do, unless that CPI starts breaking quite a bit, which doesn't seem like it wants to do too much. I could see the CPI going down to 5, but I don't see it in the 4s or 3s. I don't see it like that. Not the way
really
people.
the
Not the way
5s,
people.
huh?
Well, yeah, simply because owner's equivalent rent could start coming off a little bit, and just look at the Fibonacci number. Didn't we come from 2 up to 9? So there you go, 7. Half
Yeah,
of
yeah.
7, half of 7 is 3.5. So you're at
Yeah.
5.5.
But I think, well, we'll find out, because guess what comes next Wednesday?
Yeah.
Or is it Tuesday or Wednesday? We get CPI. I think it might be Tuesday.
But there's too many people out there working, too many people out there making money, and too many
That's
people
true.
want to spend. And we're coming into the spring and summer. I don't know that you can be counting on consumer spending to drop when the weather gets better.
But can I ask you to speak to something that you noticed and you're seeing and that I'm seeing? And that's the big shift from the banks to the money market funds. And now everything's starting to fall into jeopardy again. I don't know.
Yeah.
I mean, can you because you mentioned money markets before, and that's now the perception is like, well, why would I leave my money with a bank that's giving me 1/4%?
Well,
when I
that's
can move
true,
it over to a money market fund, which is giving me 4%.
Yeah, my personal opinion on the Silicon Valley thing was it seemed to be a little bit of a play that people who could not go down and get their deposits out, created some kind of fever about a bank run, and then all of a sudden, the liquidity the bank didn't have was provided to them either by the Fed or other people, so these people could get their money back out. I mean, there's no reason to run on any bank, because you don't need every dime you have in the bank tomorrow.
People are worried about their money, though.
Well, I mean, they're worried about it because they wanted to get their money out and their liquidity wasn't there. So you create a situation with that bank stock going down, and you start screaming out, run on the bank. And you're going to get the Feds to come in, and the Feds can print money. And these other people can go to the borrowing window, which I don't know if is any different than printing money, and basically get their liquidity. So it's kind of like a little bit of a play, I think, because to be honest with you, it seemed to me that all you had to tell people is like they do with these private equity deals. You can't get all your money back in one day, sir.
No, you can't.
And that's why the private equity, doesn't have these problems as much, because, the people get in there obviously are well-heeled people, QE people,
Right.
and they also know well in advance that this is not going to be something you're going to attack anytime, the news goes against you.
Right. We got asked a question. It's actually from a good friend of mine, so who's here with us today. And George, if gold gets into trouble, how low could it go? Initially, I don't necessarily see that, but I would think if it gets into trouble from here, 1,800 would be a good start.
I mean, the two numbers I would look at is 1,800 would be a big problem, and then 1,500 would be the abyss. So
1,500, yes, that was going to be my second part.
Yeah. So if you want
but I'm actually going to call it 1,600.
If I was holding on to coins or something, I would be concerned about holding on to coins if it broke under 1,800. And then at 1,500, I'd probably see if I could use them as an ornament on my Christmas tree, because that's what they'd be used for at that point.
Right. I actually would use 1,800. That would be your first sign of, something's wrong.
Yeah.
And then the second one to me would be, George, would be that low right there, which it came down and it held 1, 2, 3 times.
Yeah, 1,600, something like that.
1,600.
But if it goes to 1,600, throwing another $100 on it, it's not going to be a tough thing to do.
We're in trouble.
Yeah.
We're in trouble if it does.
Hey, let's not lose sight of before we leave. I want to do the dollar index, DXY, and let's find out if the U.S. dollar is going to hold 100, or if it is going
actually think, Jim, it's going to go down and test it.
Yeah, but he's going to hold it. And
I think so. I think out of this particular run, I think it does, because what I got going on is a top of at the 114 was an A wave, intermediate degree. What we got is and now we're doing an intermediate B wave. So we're inside all that. Here's the first leg down. This should still have a lower and then an upper. If it comes down and tests par, this 100 level,
Right.
and can hold it, then expect to run back up, but not really to get back above 106.
No, 106 is the
Then-
line in the sand. When it gets above 106, you're now in a new bull market. But if you can't get above 106, you can forget about the bull market.
We can forget about it, and we're going to get another one of these
Yeah.
starting from here. And then we're looking, yes, subpar, definitely. Sub
If they
97,
break, if they
definitely.
break that 3.43% on the 10-year, this thing is going to break 100. Because
Amen.
if our interest rate advantage totally goes out the window, which it would if we broke under 3.43% on the
Right.
10-year,
Right.
then no one's going to want the US dollar. And there you go with gold, and there you go with oil, and there you go with inflation. And then who knows, that interest rate drop like you were talking about could be very temporary.
Extremely temporary,
Yeah.
because then instead of, we won't be worried about a 3/4 of a basis point, 75 basis points. We'll be worrying about 125 basis points or 150 basis points, because they're going to have to move fast. They're going to have to pull Paul Volcker. And those of you that aren't old enough, please go back and read about him,
Yeah.
because he confronted the same situation.
I've seen some moderation in the grocery store on a lot of items. They used to be $4. They jumped it up to $8, and now they're in like $6. So that's what I'm trying to say. Backing off in inflation towards the 5 number is certainly not off the table. But this 2% is way out there. And
I'm waiting for them to adjust that, Jim. I'm waiting for them to realize that's an impossibility and go to 3 and consider that a big deal.
Yeah.
Which
There's
is
a lot
still
of
like,
listen, there's a lot of excitement here, and I'm going to lead it into you making sure people get a hold of you, because you've got the 10-year on a ledge, you've got the dollar on a ledge, you got gold on a ledge, and you've got the energy prices coming up to resistance. All of those
Right.
things will be getting resolved here in Q2, I think. And so
Right.
that could mean, big volatility in the dollar and interest rates, could mean very big volatility in gold and oil. And of course, that would probably translate into a lot of action in the stocks as well. And
right.
the big question is, has the tech rally seen its course? Because it is now starting to underperform S&P, which would be
Yeah, it
interesting,
really
because there's
is.
a lot of people in the tech now. I mean, they're buying NVIDIA like they're buying the money market fund. I mean, like there's no risk in it. Things at like 100 PE ratio, look on a forward looking basis or something. It's
I
not
hear
like
you.
these stocks are not dirt cheap, but they're buying them as if that chat GBT is going to be happening tomorrow, kind of like they thought EVs were going to happen tomorrow. And
Right.
that, tomorrow is a little longer runway. So.
Right. I think once we factor in, chat GPT and or just artificial intelligence, yes. New sector, going to be important, moving forward, et cetera, et cetera.
Yeah.
Going to have the pluses and the minuses, all the rest of that. Getting in early, yes.
Yeah.
There'll be plenty of time to really play all of that. But I do agree with you that I think that tech is underperforming. Tech, I think we need to remember, folks, even though Apple is $1 trillion company, or plus trillion, then you got to remember they still borrow money. So does, Meta. So does Microsoft. So do all of them. They borrow money. Meta, what do you think that they got their $4 billion, whatever, $40 billion buyback? Do you think that they just pulled that out of their reserves? No, they borrow it. So there's still a borrowing factor to go. So they are interest rate sensitive, all of them. Rates start hiking up again, as they seem to look like they were doing. Now they're relaxing a little bit more. Not good for tech.
Yeah.
So I think that, yes, I agree with what you're saying, that tech is becoming the laggard. But keep in mind that we got daily expirations, weekly expirations, and in a lot of these big tech stocks, they know exactly how to move them.
All right, let's get telling people how to get a hold of you. We're at the top of the hour, and how they
Yes,
get a
I'm
hold of you,
sorry.
Michael.
Good. Thank you.
Yep.
Thank you for that reminder. Again, you can get a hold of me, Michael at mjf1partners.com. You could send me an email. I like questions. I always answer questions. You can follow me on YouTube, and that's Traders Helping Traders, and then my name, Michael Filighera, and you will get access to my updates that I put on every day for the S&P and for the NASDAQ. Those are the futures markets. And once a week, I do a big picture update, which includes everything we just talked about here today.
Excellent. And as far as optionprofessor.com, you just simply go over the website, you put your information in, and I'll be able to send some stuff out to you on the options. But also, I have a 1-hour session where I go over technical indicators, like we just talked about the energy 2 weeks ago. That was a great call. We've got other ones, I think, coming up that could be great. So go to optionprofessor.com, put your information in, and then I'll explain exactly how it works on our one-on-one session. Michael, we went over a lot. There's a lot going on, so I hope people do get a hold of us and get more information. And we'll definitely be doing this again. So thanks a lot for coming in today.
You're very welcome. Thank you, Jim. It's been fun.
Okay, David, back to you.
All right. Thanks, guys. Great discussion today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube or your favorite podcast app, or also now on Substack. And you can also just go to TimingResearch.com to get the archive for this show as soon as I can get it posted, as well as any of the past shows or events. And I just want to thank my guests again for today, Michael Filighera of LogicalSignals.com and TradersHelpingTraders.com, and the Option Professor of OptionProfessor.com. Thanks, everyone.
Thank you.